watching the news at all, you know about the last-minute debt deal that may finally be taking shape. However, do you know what happens next or how it could all impact our finances? If you don't worry. Financial planner Rob Wilson is with us this morning to help break it all down. Good morning.
Good morning.
Yeah, okay, so the debt deal, they finally have an agreement voting. Tell us what this is all about.
Well, you know, this was all sort of kind of a made-for-TV drama anyway, in the sense that the issue was really something that was under our control. I mean, people are still willing to lend to the United States. We just had to approve ourselves to do so. And, you know, a lot of people like to talk about who won, you know, the Democrats and Republicans, kind of like it's the Steelers versus the Ravens. And I think the politicians feed into that, and they feel like it's their own little game. But I feel like it's really supposed to be about us, right? Right. But having said that, I think it's good that this decision did force them to start a dialogue and start to make some difficult decisions, because otherwise, you know, they tend to just kick the can, you know, down the road. Yeah.
So we're about halfway into the year now. Tell us where we stand financially as a country.
Well, as far as the debt ceiling, you know, the president did announce that there was a deal struck last night that would raise the debt ceiling and also reduce spending by $1 trillion over the next 10 years, which is, again, even in and of itself a little sketchy, because a lot of those people aren't going to still be in office in 10 years. So how can you know what's going to happen beyond, say, the next administration? But they do have a deal. It has not been voted on yet. So I think the markets are happy that they made an announcement. But, you know, there's still some work to be done. I wouldn't be surprised if something happens to derail that, you know, at the 11th hour. So we'll see how that plays out today. Okay. But as far as the mid-year goes, I mean, there is good news. The markets are up. So the Dow Jones is up this year, and it's up 22% over the past year. The NASDAQ is up. Companies are making money. So, you know, we just had a lot of quarterly earnings reports. Earnings are up about 10%. So there are some good spots out there. The bad news, obviously, is jobs. Unemployment is remaining persistently high. We're still up about around 9%. And the economy can't really recover until people start to feel better about their job situations and can feel comfortable about going out and spending money. So there are some good bright spots, but we still have a lot of work to do.
So if these companies are making more profits, why is it not translating into more jobs?
You know, I think companies are kind of using it as an excuse not to hire. So if you're making money with the employees that you already have, why not squeeze every little bit of productivity out of them until you really have to hire? And until not hiring people inhibits their ability to make more money, then I don't think you're going to see them hiring in a major way.
So do you think that these profits are going to continue, though? The companies are still going to keep growing, or are we going to see more negative than positive?
Well, as far as the overall economy concerns, you know, there are bright spots. Some companies are actually slashing jobs. So the financial industry, housing, construction are areas that aren't doing so well.
Right.
GDP was only 0.4% growth in the first quarter, 1.3% in the second quarter. So, you know, the overall economy isn't doing any, so well. You got to pick your spots in your bright areas.
Okay, well, let's look to the next half of the year. What moves should people make in the next through January?
Well, staying along with the football analogy, I think you have to go in at halftime, make some adjustments, and come out ready to play a little bit different ball game. So we know that some companies are making money. So I think you want to target those areas. If you're out of work or you're looking for a job, think about the companies that are making money and have a lot of cash on hand. There was a report that came out last week that says that Apple Computer actually right now has more cash on hand than the United States Treasury.
Whoa.
So,
okay, that's crazy.
Yeah, so maybe Steve Jobs can loan us some money and we can get out of trouble. But look at those companies who are doing well, making money, have a lot of cash on hand. If you're looking for a job, think about working with a headhunter or a recruiter. I think these are individuals that will know and be more intimate with companies that are hiring, where the hot spots are, where there's more demand, and so they may be able to help you get a job.
So they can do some of that research for you, or if that doesn't work for you, do your own research. Find those companies, like you said, that have a lot of money.
Just pick up the newspaper. You'll see the companies that are doing well. They're going to be more likely to hire you. I think as far as your investments go, hey, the market's been doing okay. You should feel pretty good about your 401k. There are opportunities there. So pay attention to your investments and see where you can make some money. And then the last thing is prepare for some of these entitlement programs and some of these things to change. I mean, we voted for change, but change is difficult. So think about when you're trying to lose weight and you finally make that decision, but it hurts when you go to the gym and you actually start working out. So change is difficult. It's going to be tough. Some of the things that you've depended on and thought were going to be there may not be there. So start to prepare yourself for that right away.
We're talking things like maybe Social Security or health care, those kind of issues?
Absolutely. I think especially, let's say, you know, my generation, folks that are younger than I am, it may not be there. It may be at a very reduced level. So why not start to plan now for it not to be there? If it is, then it turns out to be a bonus.
Yep. Great advice. Thank you, Rob.
Thank you.
And be sure to tune in every other Monday for Money Monday with financial planner Rob Wilson of Blazer Capital Management.